Let's talk about commodities. These aren't just numbers flashing on a screen. We're talking about the actual physical stuff that builds our world. The oil that fuels our cars, the gold inside our phones, the food on our tables. It's the foundation of, well, everything.
But here's the big question, right? Why do the prices for these things swing so wildly? And more importantly, what are the real signals we should be paying attention to over the next year or so? Well, let's dive in. The answer, when you get right down to it, is pretty simple. Commodity markets aren't some abstract financial game. No, they are the pulse of the real world. They react in real time to everything, from conflicts halfway around the globe to a sudden change in the weather.
And that leads to the number one rule for understanding this stuff. Before you even think about looking at a price chart, you have to ask yourself, what is actually happening in the world right now? It's just common sense. Think about it. When tensions flare up in the Middle East, what happens? Oil prices jump. When a massive drought hits a key farming region, you better believe grain prices are going to feel it. These real-world events are what truly move the needle. Okay, first up, let's tackle the energy market. Right now, it feels like the whole world is walking a tightrope, trying to find some kind of balance. And oil is sitting right in the middle of it all. You see, the oil market is basically in a constant tug of war. On one side, you've got things like OPEC Plus cutting back on supply and all the geopolitical drama pushing prices higher. But on the other side, you have this drag from a slowing global economy and weaker demand trying to pull prices right back down. It's this incredible balancing act happening every single day. So these are the triggers you really got to keep an eye on. Any little escalation in the Middle East or new sanctions on countries like Iran and Russia can send prices on a roller coaster. And with natural gas, it's all about Europe's quest for energy security and, of course, how cold the winter gets over in Asia. That winter demand is a huge deal. All right, next up, precious metals. For literally centuries, gold has played this really unique role in our financial system, especially when things start to feel a little shaky. You hear this term all the time, right? Safe haven. Well, what does it actually mean? It's basically an investment that people run to when the markets get turbulent. It's seen as a reliable place to park your money when everything else feels kind of uncertain. And let's be honest, there is absolutely no shortage of uncertainty right now. You've got major political shifts happening, ongoing conflicts in Ukraine and the Middle East, and you've even got the world's central banks buying up tons of gold for their reserves. All of this just pushes more and more investors toward the perceived safety of gold. Now, silver. Silver is fascinating. It's like it has this split personality. On one hand, it often trades like gold as an investment. But on the other hand, its price is hugely dependent on industrial demand. I'm talking about things like solar panels and all kinds of electronics. So silver is caught between being a financial asset and a critical metal for our modern economy. Okay, shifting gears big time. Let's talk about agriculture. Because if precious metals are all about financial fears, agriculture is about something way more fundamental, the weather. It's really a weather game. I mean, the connection to the real world here is just so direct and so powerful. The global supply of crops like wheat, corn, and soy literally hangs in the balance of the weather. One bad drought, one major flood, or a strong El Niño event can throw the entire supply chain into chaos almost overnight and send prices through the roof. And what's crazy is just how concentrated some of this production is. You want to know about coffee and sugar? You better be watching Brazil. Cotton and more sugar? Keep your eyes on India. And for coffee, Vietnam is another huge player. The fate of your morning cup often comes down to the weather in just a couple of countries. So what does this mean? It means a weather report from one of these places isn't just local news. It's a critical global market signal. The price you pay for coffee can literally shift based on a single weather forecast from South America. And finally, let's get to base metals. Seriously, if you want a quick check on the health of the global economy, you could do a lot worse than just looking at the prices of copper, aluminum, and steel. They're like a mirror. There's this classic saying in the markets, copper has a PhD in economics, or sometimes just copper is the doctor of the economy. And believe me, it has earned that nickname for a very, very good reason. Why? Because copper is literally everywhere. It's in all kinds of industrial manufacturing, it's essential for big infrastructure projects, but here's the kicker for today. It's a super important component in all the big growth areas, like electric vehicles and renewable energy tech. So when copper demand is strong, it's a pretty clear sign the world is building, growing, and moving forward. And it's not just copper. The stories for aluminum and steel are directly plugged into the health of China's giant economy. If Beijing announces a big stimulus package or if their economy hits a slowdown, you see the impact on those metal prices almost immediately. Okay, we have covered a ton of ground, but it all comes down to the most important point, I think, which is knowing the difference between trying to predict the future and just understanding reality. So here's a really simple framework you can use. Step 1, just observe what's happening in the world, the politics, the weather, policy changes. Step 2, pinpoint those specific real-world triggers we've been talking about. And finally, step 3, connect those triggers to what you're seeing in the prices. That's it. That's how you go from just guessing to actually understanding what's going on. So let's do a super quick recap. For oil, the big word is geopolitics. For gold, it's that classic safe haven story, and that's not going away. For agriculture, it is all about climate risk, plain and simple. And for metals, they're your window into global economic growth. So I'll leave you with this final thought. Commodities aren't just assets to be traded back and forth. They are a living, breathing mirror of the world we all live in. And by understanding them, we don't just get smarter about markets. We get a much clearer picture of where we've been and where we're all headed. Thanks for digging into this with me.